They think it's all over. Number 10 Downing Street has concluded that trade talks with the EU ahead of the 31st of December deadline for the transition period are effectively over. So in this video, what a disorderly or no deal Brexit is likely to mean for the economy and for your personal finances. Hi everyone, Martin Bamford here with a late Friday evening update about an eventful day when it comes to Brexit, what it might all mean for your money. And we'd almost forgotten about Brexit, hadn't we, with all the pandemic stuff going on. It was at the back of our minds. But of course, we've got this looming deadline, the 31st of December 2020, the end of the Brexit transition period, only 77 days away. And some important news today with Number 10 Downing Street confirming that trade talks with the EU are effectively over. They've told the negotiator, the EU negotiator, Michel Barnier, he doesn't have to come to London next week. There's no point in him coming unless the EU are prepared to make some fairly major concessions around their negotiations, which seems quite unlikely. So this looks like Brexit trade deal talks are dead, that we're going to have a no-deal Brexit come 1st of January next year. What is that likely to mean for the economy and for your money? Now, some context for this. Yesterday, Thursday, was a fairly important milestone. There was a meeting of EU leaders and the UK had set yesterday's date as a pointer to say if significant progress had not been made on trade talks by yesterday, then there would be little point in continuing. And EU leaders, when they met yesterday, I think all agreed that there was little progress being made. That was fed back to the UK, and that conclusion has now been reached. There is little sense in continuing with these trade talks. And this evening we heard from the Prime Minister's official spokesman, who said in not so many words that there is no point or little point in Michel Barnier coming over to London next week to continue trade talks unless the EU are willing to discuss specific legal agreements, legal text, and not get bogged down in details about some of the contentious areas. And then he went on to say trade talks are over. The EU have effectively ended them by saying they do not want to change their negotiating position. Boris Johnson said that the trade talks were over because the EU were unwilling to consider the UK's preferred trading agreement, which is the Canada-style arrangement, the free trade deal that the EU currently have with Canada. And the Canada-style deal does appear to be off the table because the EU wasn't offering it like for like. There was some differences between the deal offered to Canada and what was being offered to the UK, mostly around the length of stay for short-term business visitors and the lack of sector-specific provisions for key industries with particular technical barriers such as motor vehicles, medicine products, organics and chemicals. So as a result, the UK is now looking at this Australia-style trade deal. What does this all mean for your money, for the economy? I thought in the rest of this video we'll just take a look at what some of the implications might be from this no-deal Brexit. It's worth reiterating that the Australia deal that the government keep talking about is no deal. So it's effectively reverting to World Trade Organization rules. Interesting to note too that the EU doesn't currently yet have a deal with Australia. Talks between the EU and Australia are ongoing. They have a World Trade Organization style arrangement, but with significant barriers and tariffs on imports and exports. So we are talking here about a no-deal Brexit. And only this week we heard from the OECD in their annual report that a no-deal Brexit would further compound the issues the UK economy is facing because of COVID-19. It would hamper our recovery from this COVID-19 driven recession. The OECD forecasts that the UK's economy will be 6.5% smaller than it would have otherwise have been had we arranged a trade deal with the EU. And that's within a few years' time, that's likely to happen. So that's their current forecast. However, they said that had we struck a trade deal, free trade deal, the size of the UK's economy would still have shrunk by about 3.5% compared to the size of the economy in a few years' time had we stayed in the EU single market and customs union. So we would have seen some shrinkage compared to staying a full member of the EU, just a lot more because we're not going to get a free trade deal. Some parts of the economy will be hit harder than others when it comes to this no-deal Brexit. The biggest impact appears to be on areas like car manufacturers, but also textile producers. They're going to be particularly hard hit. We shouldn't lose sight that this is likely to be bad news for the EU and various EU nations as well. I think a Brexit with no trade deal is best described as a lose-lose scenario. This is not good news for the UK economy, but it's also not good news for the EU economies, the EU27 economies. And some countries in the EU are likely to be harder hit than others. So the average hit to the EU is significant, but some countries will suffer even more. EU countries with a close geographical proximity to the UK are likely to be harder hit. So Ireland, but also the Netherlands and Belgium as well are likely to be harder hit. Luxembourg, because of its financial services speciality in its economy, is likely to be hit by this no-deal Brexit. And Commonwealth nations, so Cyprus and Malta, which do more trade currently with the UK because of that history, they're likely to be hit harder than average too. Now, the UK could mitigate some of this hit on its economy from a no-deal Brexit. Firstly, through deregulation, it will be free to make up its own rules and laws from the 1st of January. And secondly, by establishing new trading partnerships with countries around the world outside of the EU. We saw earlier this week the Ivory Coast signed up for a trade agreement with the UK, only worth around £400 million a year. So that one's pretty small beans, that might be small bananas, but it's a start, and these things soon add up. If the UK starts doing multiple trade deals with different countries, it won't fully replace the trade deals it had as a result of its EU membership, but it will head in the right direction. It will mitigate some of that economic impact. So what impact is this no-deal Brexit likely to have on your personal finances? We can only really speculate here. I think the first thing to say is unemployment is likely to rise as a result of the no-deal Brexit. We're already seeing the unemployment figures rising quite quickly. They are likely to surge after the end of this month when the jobs retention scheme comes to an end, the furlough comes to an end, and then this no-deal Brexit, I think, will push unemployment figures up even higher. So we're likely to see much more competition in the jobs market, far less job security than we've been used to in recent years. But because of a combination of factors, COVID-19 is still going to be the dominant driver behind unemployment figures rising. We might see fall in house prices, and that one is purely speculation, but if it's harder for EU citizens and other people around the world to invest in UK property, overseas investment has been a big driver of rising property prices here in the UK, particularly in London and the South East, so that could be a contributing factor. We might also see higher prices for your weekly food shop. So with food products brought across from EU countries and those trading arrangements, that could push up food prices. That could feed through into higher price inflation. Although, of course, keep in mind that price inflation is currently very, very low. So there is some scope for inflation to rise without having too much impact on our day-to-day spending. And we might see a fall in the value of the pound sterling. Now, for some investors, that can be quite good news. And that's because the majority of revenues for FTSE 100 listed companies is actually earned overseas. And when it's brought across to the UK, with a weaker pound, it can make those companies more profitable. We saw this in the aftermath of the Brexit referendum when the pound fell, and actually the FTSE 100 went up in the following weeks and months because companies on the FTSE 100 were more profitable with a weaker pound. So it's not all bad news. And much like that Brexit referendum, commentators do appear to be fairly evenly split when it comes to their opinions on the likely outcome of this no-deal Brexit. I think it's really a case of wait and see. We don't know for sure what the real impact's going to be. And actually other geopolitical events could well overtake Brexit as having the dominant impact on the economy, on our personal finances, as we've already seen this year with COVID-19. In any case, it is never a bad time to get back to basics with your money, to do some housekeeping, to make sure you're in as healthy a possible state when it comes to your personal finances. So I'm talking about budgeting, paying down expensive debt, talking about making sure you have a healthy cash reserve, making sure your insurances are in place, and then looking at your investment portfolios and ensuring there is sufficient diversification. So if one particular investment type suffers, hopefully the others will shore up returns over that short to medium term. What do you think the economic impact of Brexit will look like? Let me know in the comments below. I'd love to hear from you. Until next time, I'm Martin Bamford. Thank you for watching this video. When it comes to your money, the more you know, the faster it can grow.